Now, traders at Access Bank say they expect a quiet trend in the Treasury Bills market to continue as investors turn their attention to the Nigerian Treasury Bills primary auction today, where Nigeria's Debt Management Office is scheduled to offer 155 billion naira across 3 tenors. Odinaka Linus-Nwokonkwo, a fixed income trader at Access Bank, joins us now to discuss activities at the fixed income and forex markets. Odinaka, thank you so much for your time. So what are your expectations as we move into this primary market auction? How do you see investors reacting to what is on offer?
Hi, yeah. So what I see is an oversubscription in the amount of on offer due to the increased normal supply. So you're going to see a bearish sentiment in the market. Current secondary market is currently being offered at above 7.5%. So we expect bids to be above those levels and closing rate to actually be above the 7.5% handle.
All right. And what about the bonds market? What is on offer moving into in the next couple of weeks? And how do you see yields evolving in that segment of the market?
So market has been quite bearish. From Monday, in fact, early this morning, we saw an intensive bearish market. We saw the 30-year reopening trading at about 13.5 levels this morning. You can recall that the auction closed at 12.8. So we've seen at least a 70 basis points increase in yield. So we expect this to continue. Yesterday, the DMO released the circular for the bond auction where they are expected to offer about 150 billion across the 2028, 2036, and 2050 maturity. So in lieu of that action, we expect a bearish sentiment to persist.
As you know, the September MPC kicks off tomorrow. What are traders looking out for in terms of decisions from this meeting that could change sentiments in any way?
Looking at MPC, so for me, I think they will hold those parameters constant. And I think the prices are already, it's already been priced in the securities. You know, looking at where the bond yields are trading, it's currently at negative interest rate. But however, MPC committee should be able to, retain the parameters, looking at if they increase the MPR rate, possibly you're going to see a little bit of tightening in the economy, which is not what they would actually want, considering the GDP success in GDP improvement of about 5%, what that we saw in the last quarter, and also reducing it, you might be that might create an unnecessary speculation of effects. So I think retaining the rate is what the MPC committee should do.
As you know, the August inflation numbers are out, and we continue to see that moderate down to just over 17%. Would you say that the bonds are reflecting an expectation of further declines, or how is the market reading the trend relating to inflation?
Yeah, so inflation result came out early this morning at 7.01. That's about 37 basis points from where we saw it last time. Like I said, this inflation result it has already been priced in the bond market. So bond market is already at a negative real interest rate. So investors are probably not actually looking at the inflation figures as it comes, but obviously they are still going to expect better yields just to cushion the negative real interest rates at which they see now.